Singapore's services sector earned less in the first quarter of this year compared to the previous year. But the sector showed a slight improvement, with firms seeing a smaller dip in revenue compared to the fourth quarter of 2020. Economists say recovery is likely to be bumpy across various industries. Geraldine Yap reports.
There are small signs of some recovery for the services sector. Firms reported lower earnings in the first quarter, with revenue dropping by 1.5% on year. It's not as severe as the 7.6% decline seen in the fourth quarter of 2020. On a quarterly basis, earnings fell by 0.6%. Performance was mixed across the various segments. Industries like education, infocom, and finance and insurance generated growth. Others, such as professional services and administrative and support services, are among the worst hit. One analyst says these industries are likely to suffer in the near future because of reduced economic activities.
Administrative and support services industry, I think there was some weaker demand from firms who are engaging in construction activities, and that's partly attributed to a bit of a manpower crunch in terms of the foreign labour coming into Singapore and some of the projects being delayed. So that is also weighing on, having a spillover effect on the services sector.
Other experts believe recovery will depend on whether Singapore can control the spread of COVID-19 and also what happens in the region.
There are many countries that are struggling. It's not even just about vaccination process, but they can't even contain the spread of the pandemic. So given, and many of these countries are countries that are around Singapore. So these are neighboring countries. We have to be very careful and cautious with regards to opening our border. And if that is going to be the case, then the outlook for tourism as well as aviation sectors will definitely be a lot more challenging.
Both analysts add that any recovery is likely to stay uneven across the various industries.